All right, everybody, on this session, we're going to talk about the language of currency pairs, okay? So we're going to understand what that relationship is like and why you should really know this. Currencies move in conversation, not isolation. You're trading that relationship between one currency and another, not just the individual symbols. Each pair is a tug of war between the economies. A currency pair shows how much one currency is worth compared to another. You're not buying one single currency, you're predicting which of the two currencies will outperform one another. Okay, so I'm going to show you that and we'll be more detailed under the um, currency strength session. So on here, we're really going to focus on just what the different currency pairs are and what they mean. Okay. So the conversation between all of the pairs is going to be crucial to understand who is telling you what and what the actual pair is saying. Okay. Most of the major pairs all include the US dollar. All of them do. Okay. The US dollar is the world's primary reserve currency. All right, guys, so let's get into the major pairs. They're basically the backbone of the Forex market, making up 80% of the daily trading volume. They all include the US dollar, and that's considered the primary currency of reserve. Okay, the primary currency of reserve. So if you're taking notes, that's definitely a key point to write down. The currency of first reserve is going to be the US dollar. Okay, then we have high liquidity that comes with these currencies or currency pairs. We have tight spreads, which means these are cheaper for you to trade on the Forex side, and clear reaction to global news. The majors are where the banks play and where we study their footprint. So if you're trying to figure out what the big banks are doing, you'll be able to see it with all of the currency pairs that have USD associated with them. So let's talk about it. We have seven power players. Okay, we have NZD/USD, the New Zealand dollar versus the US dollar. We have USD/CAD, the US dollar and the Canadian dollar. We have AUD/USD, that's the Australian dollar and the US dollar. We have USD/CHF, that's the US dollar against the Swiss franc. Then we have the US dollar against the Japanese yen. Then we have GBP/USD. Then we have Euro USD. So we have all of these major currency pairs that are going to be considered our majors. Remember, anything that has USD either on the base or the quote is going to be considered a major player. Okay, a major player. Now let's go into the minors, okay? There's going to be a different type of dialogue here. They reveal the inner market strength. So, like Euro, Asia, what's kind of happening over there with those other countries. They can be more volatile and a lot more faster than the US or those major currencies, okay? They really give a lot of insight to what the money flow is like outside of America. Okay. Majors show you what the world believes. Minors show you who's gaining or losing that belief. Let's talk about the different minors. So we have EUR/AUD, EUR/AUD. We have EUR/GBP. We have CHF/JPY. We have Euro/JPY. We have GBP/JPY. And we have AUD/JPY. Okay. Now we're going to talk about these individually, so give me a second. Because each currency has a personality, and we really need to learn what that is. If it's a safe haven, if it's based on commodities, like what exactly does that mean? And that's going to tell you when you should predominantly be paying attention to these things. Okay. So the US dollar, right? We talked about this already. This is the currency of first reserve. Okay. Currency of first reserve. So it is a safe haven in times of global fear, interest rates, inflation data, and economic strength. Okay? Behavior, it controls commodity prices like oil and gold. Its strength or weakness influences every other market. Heavy on, it influences every other market. And we'll talk about that a little bit later. Okay. Strength signals higher interest rates and global uncertainty. Weakness, economic slowdown, Rising global risk appetite. So we'll talk about that a little bit more when we talk about risk on, risk off. Then we have Europe and Asia, EUR, the economic giant. EUR represents 20 plus nations, a slow, methodical mover. Tells the story of Europe's stability, strong when unified, weak during political tension. And I'm talking about political tension in that area. Okay. Then we have JPY, the safe haven or the Haven Guardian is what they call it. Investors run to JPY during fear or recession. This is going to represent the market's mood. Weakness when global risk appetite rises. Okay, you're going to see weakness here when global appetite rises. All right, then we have GBP, the volatile leader. Fast, sharp, and unpredictable, the emotionally expressive currency. So this one's a little bit dramatic, and y'all will understand that once you start trading. Moves aggressively on political shifts and inflation news. Okay. Make sure y'all are taking note of these key points: political shifts, inflation news. Then we have the fortress and the commodity pairs. So we have CHF, which is considered the fortress. This is the strongest safe haven. Okay. There's a lot of trust over here. Moves quiet, but always gives the opposite to risk. Okay. Always gives the opposite to risk. Then we have AUD, the commodity currency, follows global demand for metals and energy, reflects global production cycles and China's strength. Okay. Then we have NZD, the agricultural currency. This is intertwined with dairy, food exports, moves very similar to AUD. Okay. We have CAD, the Canadian dollar. This is the oil currency. This tracks crude oil prices directly, literally powered by the energy market. Okay. So, a key note for you, there's always news on Wednesday related to oil. Wednesday is going to always be very important to pay attention to any currency pair that has CAD connected to it. Okay. Now, let's talk about how currency pairs behave under pressure. How do currency pairs behave under pressure? We have safe havens, commodity currencies, and risk-sensitive currencies. So I want to make sure I'm going over each of these with you, just so there's no confusion. And if you do have questions, absolutely, guys, feel free to ask them. Okay, so let's talk about safe haven. First off, what is a safe haven? One of the first things I want you to know here, when it comes to safe havens, these are the currencies that are going to um, reserve our money anytime somebody gets nervous. Anytime the market is fearful or the market is scared, this is where people run, hide, and place their coin. Okay, place their coin. So, with that being said, during recessions, market crashes, war, high inflation, you're going to notice people start to go to all of these currencies. So we have the Japanese yen, that's this Y. We have the Swiss franc, that's this one here, that's CHF. And then we have the US dollar. These are going to be your safe havens. Then we have our commodity currencies. This is the Canadian dollar. This is going to be the Australian dollar. And this is going to be the New Zealand dollar here. Okay. Now, these are commodity currencies. They follow the price of what they produce. Okay. They follow the price of what they produce. What does that mean? The Canadian currency is going to be affected heavily by oil because oil comes from Canada, or some oil comes from Canada, not all of it, but some oil comes from Canada. Most of it comes from Canada. Okay. So then we have AUD. AUD, what do you think comes from there? What do you think comes from there? Minerals, right? Then we have NZD. We have the NZD was where the leaf is, where the leaf is what the symbol is for NZD. So with that being said, you're going to have a lot of resources coming over there, like grains, wheat, stuff like that. Okay. Commodity prices rise and global trade is stronger. Okay. Commodity prices rise and global trade is stronger. That's when you're going to see these currencies being very strong. Then we're going to go to the risk sensitive currencies. They're going to gain on confidence, meaning they're going to be bullish when the markets are confident, and they're going to fall when the markets are being super cautious. So this is AUD, NZD, CAD, and GBP. Stock, you're going to see strength in these currencies when stock prices rise and investors feel very optimistic. Remember, the market isn't about buying or selling, it's about understanding who's winning the conversation. Before you ever take a trade, ask who's stronger right now and why. So make sure you don't just watch this video and skip to the next thing. You need to make sure you're watching the video about currency strength. Okay, that's going to be a huge one. And after you watch the one about currency strength, you're going to watch the one about how to use currency strength with what you're learning here. All right, guys, hopefully you don't have any questions for me. If you do, please ask them. Peace, love, chicken grease, and other tacos you can eat. I will see you in the next session.